Hi and welcome to StockInvest.us podcast for week 7. Last week I told you I thought Nasdaq would end the week at 13,800 points. I was off by 9 points, Nasdaq ending at 13,791 points. I told you I thought Apple would end at $168, ending at $168.64. I was more or less spot on. But last week is last week. What about the week ahead of us? As usual, I'll do the following. I will give you my analysis of the market. I will look at some fundamental things, then look at the charts and tell you what I think will happen for the week ahead of us. And I'm sorry to say already, I have a very bad feeling. But we will see what the fundamentals will say, what the charts would say. Then I will do a quick analysis of some major stocks, Tesla, Microsoft, and Apple. I will do Bitcoin and Dodgecoin. And then I will give you my trading tips for the week. And how did it go last week? Well, I can already tell you. Some were closed in the green, but a few were closed in the red. You will know very shortly what was what, and I will give you the trading tips of this week. But first, as usual and always, we will do the disclaimer. And after that, I will rebite back with the market analysis.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
Just as expected, last week became a red week. Nasdaq ending at 13,791 points, or down 2.18%, and still below 14,000 points. Dow Jones did a little bit better, down 1% exactly, but also below the resistance at 35,000 points. So as we can see, it's getting harder and harder to break up and continue the upwards trend which the markets were in for so long. Now they are in a negative trend for sure. And it was especially the Thursday's inflation number that made the huge drop for Nasdaq last week. Inflation came in at 7.5%, and that is actually 40-year high for inflation. And I've been speaking a lot about inflation in this podcast, and in my opinion, it will just continue. It will get a lot worse before it starts to get better. And there are some reasons for this. Of course, you notice when you shop your groceries, but also when you fuel your car and you pay your electric bills. And one of the things driving the energy prices is, of course, oil. And oil continued to surge last week, was up at $95 at some point, ending at $92 yesterday, or up $1. But it's still going up. And with the Ukraine conflict still unsolved, and we have US government, NATO pushing harder and harder, it might just escalate, and we will get that final drop that will push the oil price well above $100, at least for a short time. There is many other things. A few weeks ago there was another logistic problem in China. You hardly read about it, but containers were stuck. One of the major ports were shut down for a week period. And this caused another disruption of logistics across the world, and with less goods you have to pay more for your current goods. And this week on Wednesday, you can continue to follow the inflation numbers as the PPI numbers are coming, the producer price index. Actually, I'm wrong, it's Tuesday, not Wednesday. So already tomorrow you will know. How much more does it cost the producers to produce their goods? You will get an answer tomorrow. And on Wednesday, you will get the import numbers, import price index numbers, and I guess these will also be high. And these things will continue to push an already stretched out market in a negative trend, as I said. These things will just continue up on it. Gold, I told you that gold usually gives you an indication of what the investor thinks. And gold rose $33 last week, currently trading around $1,860. But as I said, over the last maybe 18 months, I think that we will see gold up at $2,500. We are far from that. So there is more upside in gold, and the reason why is because stock markets are going down, inflation is going up, and you will see more money go into secure items, gold being one of them. So what is it that we can expect for the week ahead of us? Well, you have to keep attention, of course, to these producer price index numbers, as I told you, come out tomorrow. On Wednesday, you will have import price index numbers. These things, if they are much worse than expected, will continue to push market down. On Thursday, Walmart will have their Q results. I expect them to be quite good, but still they will give an indication. And on Friday, DraftKings will have their numbers. I don't expect DraftKings to have any real effect on the market, but DraftKings used to be a very highly popular meme stock. And of course, there is money made and still can be made in the meme stocks. So what is it for the week ahead of us? What can we expect? I started the introduction to saying that I have a bad gut feeling, and I will try to explain why. I already told you that there will come numbers tomorrow and Wednesday. In my opinion, I don't think they will be very good, not very bad either, but they will be enough to keep a toll on the market. And if we go and check the charts, you can type in Exig or nasdaq and you will get the chart. You will see a little bit more what I mean. Because nasdaq is currently in a falling trend. We had a bottom at 13,500 points, moving up, but we need a new bottom higher. And on the chart, there was a bottom some few weeks ago back at 13,800, but it's broken down. And with no resistance to 13,500, later very little resistance all the way to the bottom of the trend at 13,000, I think the scenario is set for further fall. Volume is following the index somewhat okay, we like this, but in general there is only this slight support today. If that is broken down, and we know Friday was negative, usually at least the market should start negative, I expect we will push down. And we need a bottom above 13,500, otherwise we'll just continue within the trend. So far, markets was just doing like expected. If you go 3-4 podcasts back, I told you it was a very, very good buying opportunity because the relative strength index was low. Now we can see the relative strength index below here. And it topped out at 56 and now is falling back. Last time it bottomed out at 15 and it can go back to 15 again. And all these things indicate to me, with the heaviness of that falling trend, that we will continue down. And I said I had a bad stomach feeling. And this is partially explained by some fundamental things. Of course, the heaviness of new numbers coming out, the falling trend as we can see in this chart, but also the Ukraine conflict. It is getting to a point where things either happen, and you can read some say that, well, these things, usually these major things doesn't affect the market only for a few days and then is back to the same. I'm not sure about that. You have to remember, we are in a falling trend. We have inflation. We are already in a negative state. If we have something more coming on top of this, it could just get worse. And many think that, okay, now we fall from 16,000 points down to 13,500 points. We had a correction, but this is really no correction. In other major market correction, the market's been down 50%, so that will be 8,000 points, just to give you an idea how much more markets can fall. My stomach feeling and my guess for this week is the following. I believe that the support which the market currently is at will not hold. There is a lot of resistance just around 14,000, just above 14,000 to be exact. I think it's too heavy. I think that we will see another downturn with no support. I actually believe that we are heading for a hard fall this week. That being said, the very low, in my opinion, should be 12,800 on the upside if the markets manage to move back up. Let's say there are coming some very positive news from the Ukraine conflict or the inflation numbers, the producer price index numbers are very good. Of course, things can push upwards. I think that the resistance at 14,000 will be hard, 14,500 even more, and in very best case, it will be 14,800. I don't see that happen. Has to be something very special for that to happen. I think it's a much larger chance that we will have a huge fall. 1 or 2 very, very red days this week, bringing market down, maybe even just below 13,000, popping up above 13,000, ending at 13,100 in my opinion. Hopefully I am very wrong, but I don't see that very positive things. If market starts to move up, we get another solid pivot bottom. These rings that you can see in our charts are called pivot bottoms. If we manage to have a bottom higher than the previous one, things can of course start to change, but right now there is nothing of such sort. And the 10-year treasury yield, I asked you to keep an eye on it. I saw it was above 2 earlier this week, but before I started podcast today, it was at 195. It was down at 125.35, then just moving upwards, and I think it will just continue upwards as more and more people do understand, realize that there will be a lot of interest rates during the week. They will hike it more or less on any opportunity. And not to forget, what about the signals across the world? Well, we analyze, as I said before, 35,000 tickers. We give them a buy, sell, hold evaluation, and based on this we can tell how many buy signals is there just across our analysis now across, I think it's 38 markets. So far it's 21, it's slightly up from last week, was 20, so 21 this week. Nasdaq a little bit more, 14, New York Stock Exchange 22, and London at 21. And I told you it's a good thing, at the same thing a bad thing, because as we go up in numbers, there will be more room for fall. Still very low. If this was a rising market, I would say buy for whatever you have. But in a falling market, these are not still good. We need to get a little bit further up to stabilize and have enough positive momentum in the market to bring it up. And if you hear some drilling sounds, well, I'm very sorry. They are doing construction works just above me. So we will not dwell anymore about the markets. We will go to these tech analysis, where I will quickly look at some of the major stocks to see if they verify what I think. But for the market as such, I'm sorry to say, I think it will be another red week, and I think this one will be more red than last week, involving a few days of very huge falls. Hopefully I'm wrong, that we will be, as I said, on the good side. Remains to see. Keep an eye on tomorrow's numbers, Wednesday numbers. They will give you a fair idea about what will happen. After giving you the analysis of the major stocks, we will look into the trading tips for the week. But first, the analysis. And that brings us to the technical analysis, where we will look at Apple, Microsoft, Tesla. We will look at some crypto, Bitcoin and Dodgecoin, before I will give you the trading tips of the week. Which ticker or tickers will I buy? We will get back to that. I recommend you to look at charts. Your brain is an amazing thing. You can do that at our webpage, StockInvest.us, or you can use any other source, but use it. It's a good thing. At our webpage, you can type in the ticker Apple or the full name, and you will get to the analysis. And last week I told you I thought Apple would end at $168, ending at $168.84. And again, I was more or less spot on the analysis. Very nice to be back on track. A few weeks ago I was a little bit off, but finally we are back where we should be, somewhat correct. And what is it that we can expect from Apple this week? Well, what worries me is the lack of any support just under today's price, indicating that most likely Apple should fall to at least $165. When trying to figure out what could be the low, what could be the high, I look at support, resistance, I look at trends, I look at the volume. And Apple is in a slightly rising trend. The bottom is at $162, and everything indicate that most likely Apple will follow within this slight rising trend. I told you many weeks ago that when Apple was at 160, it was a natural reaction. It was a buying opportunity, and from this point you should have an upturn at least to the middle of the trend. And that is exactly what is happening. But Apple came up at $176, tried 2 times to break it up, then is falling down. And I think, as I just said, that with no support below today's level, it will at least fall to 165, could even fall to the bottom of the trend at 162. This will be a total natural reaction, nothing very special about this. The major concern, if it's break 160, then we are turning into a very negative territory. But for the week as such, I think the following will happen. There is a resistance at 170, later 175. If Apple for some reason managed to break up, it should just push very fast, as I said before, upwards to $200. If not, it will continue downwards, and in my opinion, that is exactly what is happening. There is a sell signal from the short-term moving average, there is a sell signal from the long-term moving average, these lines which you can see here. And with only support as 165, I'm pretty sure that during the week we will see Apple $265 before pushing up. If it push up, faces new resistance at 170, later at 175. I think the high for the week might be 175. Will not be surprised if it tries with a positive opening, then just fall back during the day. We'll test the support at 165, but in my opinion it should go as low as $162 where it pushes up, ending the week at $165. So that will be the trading the tip for Apple, that we will see Apple at $165. That brings us to the next ticker, which is Microsoft. And looking at Microsoft, we see a little bit different picture than we did for Apple. Microsoft is in a falling trend. Like Apple, very little to no support just under today's level. Find some support at 288. It's also a previous bottom, as we can see some weeks ago. Back around January 24, it fell down to 288. This is a support level. On the upside, it will find resistance just where it is. Later at 300, all the way up to 320, later at 320. Sell signal from the short-term moving average, sell signal from the long-term moving average. Relative strength index topped up around 56, is falling, and as we know, it can fall like last time all the way down to 17. You can see here at the bottom of the screen, fell down to 17. So to me, this indicates the following scenario. It might try to push up. I think 300 could be just above 300 will be too much resistance, that the stock will bounce up, so that we see it goes up maybe to 300, then fall down. And I don't think that the support at 288 is strong enough. I think it will continue to fall, and once it breaks 288, it will fall much faster. For the week ahead of us, I will not be surprised if we see Microsoft down to 280 on a very red day. I think it will bounce a little bit up, ending the week somewhere around 285. So I continue to reduce my targets, and we will just see if we are correct. Hopefully I will be wrong that it pushes up. But if you understand that when things are in a falling trend, it is much harder than in a rising trend. And if you are a trader, you should take this into consideration. And maybe try the shorter gains. Like in this case, we can see that if it goes up, it should have a fair chance to go up at least $5. And you can make, what will that be? Just about percent. For a short-term swing trade could happen already today. I don't know. The other ticker, the last ticker actually that we will analyze just to confirm a little bit about the situation that we see in the market is Tesla. And last week I told you I thought Tesla would end at $880. Ending at $860, I was a little bit wrong. It fell a little bit more. I've given you the reasons why it would fall. I also told you that I had a Tesla trade open. And as we will see in the trading tips, I will tell you exactly how that trade went. It was cut on Monday with profit, but we will get back to that. A few podcasts ago, maybe even last podcast, but I told you about this head and shoulder formation. If you are a listener at Spotify or wherever you are, this podcast will also come on YouTube, hopefully a little bit later today, for sure by tomorrow, and you will be able to see the charts. This time I'm actually showing it myself, recording the session. And I was speaking 2-3 weeks ago, and last week I also think about the head and shoulder formation that we saw in Tesla. And I'll just try, since I'm now showing you the actual charts, to give you the visuals and what you see. What you have here is head and shoulders. You have them. You have the shoulders on each side and the head. And the head was up at $1,200 at Tesla. When it broke what we call the neckline, it's just below the head and shoulders. That was around $1,030. You could expect a fall as high as from the head to the neckline, and that was around $170. You could expect it to fall down $170 by the same time frame as the length of the shoulders. And Tesla actually did. It's just following up the signal. Normally we often see they go back to the neckline before continuing to fall, and Tesla did not manage that. And I thought that it might push up to 1,000, as I said last week, that it was a fair chance for it to happen. It didn't happen. It just moved sideways during the week with a huge fall on Friday. Some support where it is today, a little bit more support at $830, but really no good support before the bottom of the trend. Sell signal, short-term moving average, long-term moving average, the third tickers right now. Where I tell you the same thing, it's sell signals from these moving averages. Everything to me indicate that Tesla should continue to push downwards. Too much resistance at 900 and let's say $900 to $930 makes it very, very hard for Tesla to push above these levels anytime soon. We have to have a huge market change. As I told you, it could be that one thing that the Ukraine conflict blows over, the inflation numbers come in better than expected, and suddenly market can change. But right now, everything is indicating that we will have a further fall. And if you are one of my listeners which have been following me for a long time, you know I like to trade Tesla. I did a trade from 560 all the way up to 1200. I did the second trade at 880, back up again. And I told you I am ready to get into Tesla again for a trade, but not yet. Now I like to see if the 880 support, where it is today, let's say, is holding. Because there is a fair chance that it will break down, and that next big trading opportunity in my opinion will be maybe around $600, could be $800. I will evaluate as we go, but right now everything is indicating that Tesla should continue downwards. My target for the week ahead of us, I think I will put $800 for Tesla for the week ahead of us. And that brings us quickly to Bitcoin. And they had a nice week last week. I said my target was 45,000. It was up at $45,000. I think it must be Thursday. It was up at $45,000. Then falling back, it's currently trading around $43,000. I gave you my reasons why I thought 35,000 would be a bottom, that we would continue upwards. What I like to see now is a new bottom somewhere, could be 37,000 points, that we see another pivot bottom. These rings are called pivot bottoms. It's significant tops and bottoms, that we see these bottoms continue upwards. I will not be surprised. You can see the Director Zinc Index was topping at 82 last week. And I will not be surprised if Bitcoin now falls down to $37,000. Could even be lower to 36, then push up. Currently, I buy signals from long-term moving average. There is a buy signals from the relation between the two. It's called a cross, a golden cross. And last time, it was, if we go all the way back to beginning of November, maybe we had a sell cross, and ever since that, when Bitcoin was up at 60,000, it's been falling. Now it's being flipped. We have a buy signal. I think crypto is on the way up. I think that we will get back to the same level, 60,000, but it, as I said in several podcasts, it will be a slow ride. Sorry to say. For the week as such, I think it's a fair chance that we can have a fall down to $37,000, find a new bottom there, starts to push up. I think it will be very hard to get up to $46,000, $47,000. Hopefully I'm wrong, but I have that feeling that we will be trading somewhere around 40,000 by the end of the week. So even for Bitcoin, I will be a little bit negative, but I'll repeat it again. I think this is just a natural reaction. You can see for yourself if you're watching the YouTube or you go and type in the ticker and you see Bitcoin chart on our webpage, StockInvest.us, you will see exactly what I see. It's in a falling trend. Everything indicates that it should continue downwards. Usually if a stock breaks up from falling trend, it goes down to the middle of the trend. That will be around $36,000, $37,000 before it pushes upwards and break the trend. So we are just talking general technical terms. The last crypto that I will look at is Dodgecoin. Dodgecoin represent more these shit coins, these altcoins, all the other of them. But at Dodgecoin, and you know I'm trading Dodgecoin myself, currently in a loss for the very last trade. It fell further than I thought, but it's starting to show somewhat tendencies to going into horizontal move somewhere between 13 and 16 cents. Only when it breaks 16 up, you will have a slight idea about the new direction. And of course, you need to break the trend line around 17 cents. That will give us idea that we have a trend change coming. There is nothing in the volume indicating. So I think it's just a slow week. We'll not waste too much time about Dogecoin. So far, having that same buy signals as I told you in Bitcoin, indicating high chance for the next 3, 4, 5, let's say 7 weeks to be better than the previous 6, 7 weeks. For the week ahead of us, I think that I will keep last week's target at 18 cents. Most likely it will be 16 or 17, but I will keep it because Dogecoin is much more volatile than Bitcoin, and you don't need much to push it back up to 18. It's an indication of the direction. And that shortly brings us to the very last part of this podcast, the trading tips. Before going to the trading tips, I just like to say I am very happy to have so many listeners and so many that have been following me for a very long time. To you, my listener, we offer a discount if you want to use our full services at StockInvest.us. You can use the discount code podcast. Simply type in podcast and there will be a little surprise for you if you want and need access to all the details. Could be the golden star or these few things which are under subscription services. So type in podcast if you like to have the discount. And by all means, send me any questions if you have. I will try to answer as we go. We are getting to the trading tips. Last week I said Facebook was my bottom. I wanted to try bottom fish Facebook. How did it go? Well, now you will know. Finally, we are at the last part, the trading tips. And before I tell you which ticker or tickers I will try to buy this week, well, we will have a look at last week. And last week it was Facebook. I said I had a bad feeling about the markets last week, that I would not go into much because I had a few open positions, which we also will get back to. But I thought there would be an option in Facebook. I bought Facebook at 228.05 on Monday. I was not able to pick the very low, but it was, in my opinion, a good price. Thing is that on Tuesday it was topping out. I think it was $237 or something. I had a 3% stop loss. As I told you, I now have a very strict stop loss on my stock. Using trailing stop loss, it was following the stock. The price was following the stop loss was following the price upwards. Facebook topped at I think 237 and then started to fall. And when it fell 3% behind the top, it was cut by stop loss at $231.15, leaving me 1.36% profit. Of course, I have to pay some commission, so it was not the most successful trade at all. But before that, we had a few tickers open, and one of them was Doyle, which bought in week 2. I said this was a very steady stock to buy. I bought it at $12.75, was following it all the way as it went. Last week it continued upwards, it passed $15, then it started to fall, and with a trailing stop loss. It was sold on Thursday at $14.82. So now the Doyle trade is closed, giving 16.24% profit. Super happy about that. Had that good feeling. The other open trade was, of course, Tesla. I mentioned I went into Tesla at 888. I told you last week that there was a fair chance that it would be closed. I thought it would push upwards to 1,000. Had a trailing stop loss for it. It was pushing upwards. Everything was looking good, but then market took a turn. And it was actually sold on Monday at $919, giving 3.53%. So another profitable trade. Then there is Starbucks, which was bought in week 4. I told you that was more like a Facebook thing. It was falling very hard. I thought there was money to be made. Bought at 95.42. It went well, okay, I would say, but markets was very negative last week, and that caused, I think it was Wednesday, it was close to $98, $99.97 was higher or something like that. And then it started to fall. It was cut by 3% stop loss and sold at 95.03. So Starbucks, which was bought in week 4, is now sold at 95.03, giving a loss of 0.41%. So more or less commission minus. So that's the trades. We managed to make money on Tesla. We managed to make money on Facebook. Not much on Facebook, of course. and very good on Dow. And this week is a very hard week. I have that feeling that it will be a very negative week. I hope I'm wrong, but I will not give you a lot of trading tips because it is the kind of place where you can burn a lot of money. And that brings me to the lesson before I tell you which kind of stock I will buy this week. I will give you that very short lesson. You hearing me speaking about the markets, about direction, about the big things and how I've been increasing and reducing my exposure in the market. Right now you might be bleeding money and there is no fun. Maybe a year ago you were very high when everything was going straight up to heaven. You had a very green trading account. Now it's probably red. Most trading accounts are red these days, simply because you lose money when stocks are falling. You do not use trading stop loss, and in general we have a problem of selling, so we go with the losses further and further down. The tip of the week is don't look too negative about a falling market, because at the end of this falling market there will be a huge opportunity. Personally, I do very best in these markets. Has to do a little bit about discipline, because when market gets totally red, I mean when they really start to fall, so far they've been falling bad, but when we will have these 3 to 5% days, and maybe you recollect from some previous podcasts ago that I was in when markets were falling too much. I buy because some stocks just fall way too much and they bounce up very hard. Seems to be the trading pattern that works best for me. Go in when people get too negative and out before it's becoming too positive. Anyway, by the end of this, there will be a buying opportunity. You just have to make sure that you don't lose all on the way down. I cannot give you all kind of advices, but try to keep some cash at any time. I told, maybe I don't remember, 2-3 podcasts ago, I told you that make the trades shorter and shorter. Don't sit overnight, because now is the kind of market where you blow profits. And if you have a profit, try to secure it early, at least use trailing stop loss. Don't sit overnight, don't sit over weekend, because you have no really idea. Try to reduce your exposure into high risk stocks and all these kind of advices. My best advices was, which I started more than, it really starts to become many months ago, it was last fall, I started to reduce my overall exposure in the market, because I knew we are heading to a top, but I couldn't tell you exactly where would it be. It could easily have been 20,000 points on nasdaq, because you never know where a rally ends. In the retro perspective, it's very easy to say, looking back, okay, 16,000 was a very high, a very good place to sell. But only now we know it could have went much further, it could have turned earlier. Following big lines give you an idea, and my argument is just that if you have cash, cash is king, because usually you are stuck in some stocks, you're not able to sell them or want to sell them. If there is a good trading opportunity, try to keep some cash, because at the end of this there will be very huge buying opportunities, and those are able to use that opportunity will gain much more on the next upturn, because after a downturn there will be an upturn. Enough said about that trading tips. What are the tips for the week? There are a few, but I found this one stock which I think might do okay. It's Impinj stock, and the reason why I will try a short trade in this, you have to watch the podcast on YouTube or go and look at the chart. It fell from 90 all the way down to 70, and it fell on very high volume, and this is usually a sell-off. What I will try to do is see if I can do a swing trade between 70 and 74, or 70 or 76. It will be very short one, just in and out, but 70 to 74 is already 5%. I'm very happy about, even 2%. 5% is very happy. If it goes all the way up to 76, we are in for a 7-8% gain. I will try it see if I'm right. I'm betting on the high volume being a sell-off. You get all the negative people out. It has a natural reaction up before it continued downward. So this is just another short trade. That will be my trading tips for the week. P. This company works with wireless gadgets, connections, so it's IT related. You can check it for yourself. Impinj Inc. P. That will be the trading tips for the week. I hope to do not much, maybe 3, 4, 5%, in the expectation that the overall week will be hard. And you may wonder, well, will I do other trades? Yes, if I see an opportunity, I will use it, because most of my money are cash. As I said, I was very low on my exposure in the markets. I keep most in the bank. See a good opportunity, I will be in, but I will also be out. And that, my friends, will be the end of this podcast. It will be the first podcast where I actually record. And you have to go to YouTube to see this. I will do more of this recording, enable you to see exactly the charts and try to give a deeper understanding of how I think and what I see, so we can see the same thing. As usual, I hope I am wrong about the red week. I hope it will be a very green week. I hope that you will have a lot of successful trades, that you will continue to build your portfolio, and that you will do very well. Remember, there is more to life than stock trading. You need that solid energy which you can get from a good walk, doing some sports, visiting friends, watch a good movie, and in 1 week I will be back. Until then,